You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is Thursday. It is noon Central. It is 1 p.m. Eastern. Yes, it is time for the old OB. Yep, your bi-weekly source for all things options related. My name is Mark Longo, coming at you from our studios here in the heart of scenic and sunny downtown Chicago. Hope you guys are enjoying the slew of content hitting the network for you guys this week. Advisor's Option, we recorded. That should be coming out for you soon. OPR, Boot Camp on the network earlier this week. Had a great sit-down, virtually, of course, with the folks launching the new mini VIX futures over there at SIBO. So check that out. Of course, our boot camps and crypto rundown on Mondays. You guys have been getting quite a slew of content coming your way already this week, and there's more on the way, including the old OB and TWIFO later today. Vol views coming up tomorrow. If you like what you hear, make sure you keep those reviews coming in your platform of choice so other folks can continue to discover and enjoy this fun network. And, of course, keep those questions coming. We do love to hear from you guys as well. Let's see who else we're going to hear from on the program today. First, let's go out to the quiet, the tranquil, the peaceful, some might say idyllic hinterlands of Chicago, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here on a day when markets go up, they get flat, but then the VIX kind of goes through the roof right before the show. So excited for everything we're going to talk about today.
Yeah, it's a good argument for don't prep for this show more than 5 minutes before showtime, because just about everything we prepped, we have to toss out the window now as the markets are turning. But before we get to that, let's also get to the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program to you as well.
It is lovely to be back in the bosom of the behemoth, the Options Insider Global Radio Conglomerate. It feels nice and warm and fuzzy in here today.
Warm and fuzzy indeed. We'll see if that feeling is alive and well in the markets as well. Spoiler alert, doesn't seem like it is, as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is going on out there, what the heck is trading as we come into the latter portion of this trading week. And it seemed like the narrative was pretty firmly in place, yet another green end to the week. Most of the major indices were firmly in the green not too long before showtime, but that has now switched. The worm appears to have turned, and most of the major indices now in the red, coming in to kick off the showtime. The only green stalwart holdout on the screen is the Dow, up about 0.25%. S&P is now in the red, off a little north of 0.15% to the dark side, and we got NASDAQ off nearly a full point, a little bit north of 3/4, about 0.8 or so to the downside out there. So big sell-off in NASDAQ, a growing sell-off in the S&P. Dow stubbornly resisting there to the upside. And our old friend Russell 2000, IWM, off about 0.33% out there as well. So a lot of interesting stuff. VIX and VVIX and everything else were kind of mildly moving to unched up slightly coming into showtime. And now, bam, they're off to the races as well. VIX was kind of up about a half a point or so. Now it's up over 3 points. About 26.10 or so coming into showtime. Puts it up over 3 points, about 3 1/3 handles from last show. So, hey, on my upside, I've been leaning in vol views. Maybe finally this is the week. Not been the best year for me from a vol prognostication perspective. But, hey, if I'm off on the wildest, weirdest, least predictive, and probably most ridiculous year in market history, or very close to it, then I'm okay with that. But that's a conversation for tomorrow. VVIX, about 119.5 coming into showtime. It was a 106, 106.5 right before the show. So the vol is obviously moving today. It was down about 2.5 points. Now it's up about 15 points from last show. So the worm is turning pretty aggressively, up probably about 13 points actually, but still big move out here in VVIX. VXX was also kind of continuing its slight upward move this week. It was at about 25.25 a few minutes before showtime. Now that worm has turned as well, up another 2 handles from there. So it's at 27.25, up about 2 3/4 points. So all these people who've been waiting for that juicy erosion, I'm looking at you, 3022 put guy out there for 100K contracts. They were all waiting, trying to get more of that juice. And VXX this week saying, nope, taking some of that back, going back up to 27.25. What the heck's going on? What is causing all this madness? Well, a lot of things. Of course, we have the global pandemic still in mass. We got earnings going on, but a very interesting development out of Jackson Hole today. The Fed effectively turning its policy on its ear, kind of throwing its previous raison d'etre, which was kind of be an inflation hawk, out of the window pretty much. That's kind of been, for the better part of the modern era, that's been the Fed's main focus, is really to clamp down on inflation. Look at various periods. Volcker, Greenspan, pick him. Obviously the more conservative the administration, usually the more aggressive the Fed administration was when it came to clamping down on inflation. So there was various degrees of how aggressive they were. But still, at the end of the day, clamping down on inflation was kind of job number one over there at the Fed. And now the Fed coming out today and saying, yeah, that whole inflation thing, we're kind of going to put that in the rear view mirror for now. Powell coming out today saying they have adopted an average inflation target, trying to help the labor market instead. Remember, there's always been this relationship. When I was in college, we were taught, stamped into our head, this Phillips curve, this relationship between unemployment and inflation, which was held to be inverse and inviolate. It could never be broken. And of course, a year or two after I graduated, bam, here comes the great dot-com bubble, and that freaking Phillips curve goes out the window. That's why they call it the dismal science, listeners. All these hard and fast relationships that are the dyed-in-the-wool bedrock of economics. Not exactly so hard and fast, it turns out, in the long run. So Powell coming out now today and saying it's hard to overstate the benefits of sustaining a strong labor market, which is a key national goal. Under this new policy, the Fed would target inflation that averages 2% over time. As a result, if inflation undershoots that target, as it has for most of the past decade, the Fed would allow inflation to, quote, run moderately above 2% for some time. He even admitted this is kind of counterintuitive for the Fed. He said, many find it counterintuitive that the Fed would want to push up inflation. However, inflation that is persistently too low can pose serious risks to the economy. And shortfalls of employment, rather than the previous deviations from the maximum level, are also going to be a big focus over there. So this is kind of hard to read this any other way than that the Fed's going to be a little bit more in tune to keeping and juicing the economy going forward here. And they're saying here the Fed won't preemptively raise interest rates as the unemployment rate falls unless that is accompanied by actual signs of inflation. So in the past, we had the Fed stepping in with the Fed put, of course, to kind of backstop the entire bounce in our markets right now. It can pretty much be traced back to the Fed really diving in with both feet into this marketplace. And now the Fed kind of coming out beyond that and saying, we're going to be a little bit more hands-off on the upside to the economy. We're not going to tap the brakes as aggressively, let's say, a Greenspan did back in the go-go 90s when they were worried about inflation. We're going to let this bad boy run a little bit. It says, by reducing our scope to support the economy by cutting interest rates, the lower bound increases downward risks to employment and inflation. To counter these risks, we are prepared to use our full range of tools to support the economy. And they admit they're going to probably allow rates to hover near zero more frequently than in the past. So this is a major tonal shift coming out of the Fed, kind of changing the way they structurally view their role out there, which is kind of fascinating. And the market at first seemed like they were liking what they were hearing. Again, firmly in the green, and now that's turning around. Of course, the S&P is now back up and slightly in the green, so maybe the market's still digesting this news. But either way, a lot to unpack here today. More on the global macro level than usual, but it's kind of hard to ignore this one. Maybe we'll start the opposite of the way we went. Let's go back to the Rock Lobster first. Mr. Rock Lobster, what are your thoughts on this? I know you're kind of a diehard, hands-off libertarian when it comes to regulation at the end of the day. What are your thoughts on this Fed saying we're going to let the pony run a little bit? And also, what else is catching your eye out there in the market today, sir?
Okay, so all of it is like, I think it's a little bit of a wow, but you think about it, I mean, what ultimately have they been doing the last 2 years, right? So as you recall, we had the China trade war, which really doesn't go, remember that was the big thing. It caused a lot of uncertainty. And then in December 2018, we had a market bottom, right? And I think TOSAW would know this, but I think the 10-year was 3% yield at that point, right? And they came and they kind of got squishy soft on everybody on rates, right? And they started the balance sheet started growing again. I don't know, is it monetizing the federal government's like what I would only call reckless spending at this point. So like a tough sort of like an odd one, now. Because we've had this COVID and this massive expansion of the balance sheet, more on really who the hell knows why, but nonetheless it happened, right? You can't they bought more assets, the government's spending more money, so clearly the Feds, let's just call it their policy or their their whole, reason for existing, so to speak, like that's just kind of, it just sort of went, it's changed and it's evolved so much, like all the activity they're doing. So maybe this is just finally Powell saying, hey, you know what? We're just finally going to match our official policy with what we've kind of been doing under the covers for the last 4 or 5 years. It's meaning, hey, we're going to be flexible on trying to make this work, and we'll see how it works, so to speak. Now, vol has had an insane bid. I think part of the reason why lately, insane bid relative to how the market's actually been trading, right? It's kind of been bull, bull, bull. I think part of the reason why was that, liquidity providers are already selling puts, because people were kind of protecting gains after we had that huge, I don't know if the economy's V-bouncing, but the market certainly did. And then all of a sudden you had this tech explosion on the top tech stocks, right, feeding into the SPY, and I think there became like a dearth of liquidity and just vols rising because people are buying calls now. Like it went from, oh my gosh, to, hey, we're going to go buy some calls. We're going to buy lots of calls, as a matter of fact. We're going to buy so many calls in Tesla and Apple, and Microsoft that the vol is going to keep expanding. And then you have waiting for the Fed. Now, all of a sudden, after VIX traded 27, and I'm just going to let you know, I mean, what was the SPX down today? Like 0.5%, maybe 0.25%? Like it's almost nothing. Really. And you still have, you're trading a 27 vol. I mean, I did take the opportunity to lighten up on some upside that I had. I got some decent prices for stuff. But, we'll see what happens. I certainly didn't get rid of all of it. But, right now, you have this continual bid for vol. And I think the hardest thing that hit everything was, because we're moving, straight up in one direction, that's still, even though that realized vol is low, it's pulling the curve up. Liquidity providers have to sell stuff, and it makes it difficult, especially if the public's not in there selling calls anymore. Because I think everybody switched. They're like, okay, hey, this Apple just goes up $10 a day. We're going to buy it. All this kind of stuff. So I thought it was sort of interesting to see how the vol market actually takes it tomorrow, meaning it almost feels like the Fed said, we're not really going to help you too much. We're going to help a little, but not too much. And I'm feeling like that was kind of the message, and the SPX right now is up 75 cents. Like that's it. SPX, not SPY. SPX is up 75 cents. So, and I think at this point with that out, and now some of the bloom is coming off tech today because it's gone up for I don't know how many 10 straight days or something. Maybe this is the day the market rests, and the news was, I think not surprising given how active the Fed's already been. So anyway, but looking at vol now, I'm just trying to see how long the 26 VIX stays here. That's kind of an amazing price, actually, given the action. So apparently vol was exploding in the SPX, obviously with the VIX higher. And again, I think people just want more curve, And I have to be honest with you. I think part of the reason is that the people are putting upside back into the market. And I think that's why the vol's going up. As crazy as it sounds, sometimes you got to look around the corner for what you don't expect. And I think that's kind of what it is. So we'll see. But that's, I think, the read on it. I think the Fed's just finally officially saying what they've been doing sort of secretly for a while. But I'll toss it to Tucson on that one.
Yeah, looking around the corner for what you don't expect. That's pretty much the entirety of this year here in a nutshell. Interesting you think that this is the Fed saying they're going to help, but not as much, because this to me reads like they're going to let that bad boy run to the upside from an economic perspective and not really tap the brakes. I have a photo around here somewhere in the studio of me and Mr. Greenspan. I would love to put to him what he thinks about this, because he's a well-known inflation hawk. And again, the Fed regimes come with different stripes in terms of how conservative and reactive they are when it comes to inflation, some less so, some more so. And you're right, kind of, Andrew, this is a bit of a tacit acknowledgement of what they've been kind of doing behind the scenes and not officially for a long time, stepping in whenever they need to. So this is kind of just making that official. But still, the Fed just making that official in and of itself is kind of a big deal. Again, I wish I could find that picture. I'm sure Mr. Greenspan right now probably not the happiest of campers on this. Look at all the steps he took to try to rein in. Look at his irrational enthusiasm comments from the Go-Go 90. He was kind of the definition of pumping the brakes. And here we are, the Fed saying, yeah, no thanks. Got to let this one, take the bit out of its mouth, let it run. Mr. Uncle Mike, same question to you, sir. What are your thoughts on all this crazy madness in the Fed? There's no viceroy here today, so you get to play. I guess we all get to play the macro guy today. It's kind of unavoidable. And then also, what else is lighting up your tape today as we're approaching Tesla and Apple splits and all sorts of madness out there?
Well, yeah, so I think that Andrew summed it up pretty well, in that the Fed is still, let's be honest, the Fed has been kind of juicing the market this isn't anything new to them, so to speak. It just what they're saying today, you can take it whatever way you want in a lot of ways, but for the most part, the Fed is, they've been juicing the market a long time. I think that's going to continue regardless of what political party takes office this November, just because of the fact that if you're appointed by a president, you're going to be loyal to a president. And if you're not happy with the president, you're not going to ruin the whole economy just to get after that president. So I really think that the Fed, and the Fed doesn't want to be known, if you're a Fed person, if I'm Jerome Powell, I don't want to be known as the guy that was in charge when the economy went way down. I'd rather be the guy that was in charge when we brought the economy back. Now, in reality, over the long term, and what really is what matters in America, Fed has nothing to do with it. However, the Fed can play a key role and actually gets looked at a lot. The Fed is kind of like a quarterback and a head coach. They get a lot more credit than they deserve when things are good, but they take a lot more blame than they deserve when things are bad. I think the Fed and the President of the United States both fall into that category, quite frankly. So I think the the Fed's always going to have a very friendly monetary policy. That's just my opinion on it, no matter who's in charge. The government's just going to print more money when things are bad. And then when things are good, just print a little more just for the heck of it. And when things are average, maybe print some money. And then so if you're bored one afternoon, they probably just go over to the printing press and take their families and say, hey, let's go print some money today. We're a little bit behind schedule. So I think it's going to continue to go in that direction. In terms of Apple and Tesla, I'm getting more. The people who are talking to me about the stock market these days are these college kids that I'm getting in touch with. So I'm very concerned right now from the market from that standpoint that arguably the poorest sector of our society is looking to invest in stocks right now. So that's a definite concern for me right now with the market. But definitely need to mention that. And then also, before I forget, never before in the history of the entire stock market has there ever been a better time to sell than right now. We do have all-time highs in the S&P 500 today. So that is happening. We're back. Markets come up about 10 points since the S&P's come up roughly 10 points since we started the show. So maybe we put a sense of calming across the market. Who knows? But yeah, we have that. Silver's down roughly 2% on the day, so that's another thing. Apple keeps tinkering around that 500 mark. I think it's going to stay close to that mark until the split, and I think it's going to show its hand either to the bull side or the bear side. The thing that concerns me right now with Apple is that's what everyone's talking about. Oh, Apple's going to split. We got to get in it because the last time Apple split, it went 7 for 1 and went right back up after it went 7 for 1. Well, that's true, but we're getting a lot of retail people that are saying that right now, and I'm not sure what your guys' experience is with that, but I'm hearing that a lot in the retail world. So that's something that also concerns me about Apple. So overall with everything, what I like about this market is that obviously it's going up. It is an Uncle Mike type of market. But what's different about this market as to what we've had over the bull markets over the last few years is that we have a 25 VIX right now. We've had consistently over a 20 VIX as opposed to the years when we have like a 10 to 12 VIX. So I had to alter my strategies quite a bit. I'm still bullish, but I'm selling more vertical put spreads, doing more spreads instead of just buying a single leg option, watching it go up, and then trying to feel weird about life because I've never done that and had so much success with it the last few years that I have. So I'm back to doing more complex trades because we have volatility to deal with. But nonetheless, still a bull on this. I think that we are definitely due for a pullback. But when's it going to happen? That's the question that we all ask ourselves constantly all the time. But overall, I think that whoever gets elected in November, I am still bullish just because of the fact that I believe in America. But I do need to say I am at a very cautious point right now in that my finger is on the figurative sell button, as it always. So that's what's going on in Uncle Mike's world. And I'll toss it back to you, Mark.
Perma bull Uncle Mike. Even he's bracing for a pullback out there, which is sane. This is sensible out here. If you weren't Uncle Mike, I would be a little worried about you right now. Speaking of worried, let's see how much this little wall of worry that popped into the market today is driving paper out there. Also, by the way, you mentioned retail flocking in and debating whether these split names will be higher post-split or not. We have a poll about exactly that coming off our Options Insider radio program. I should say Option Playbook radio program over there with Mr. Brian Overby. He brought that up on his show. So we have a poll over there at Options for you guys to go vote right now, make your voices heard. Will Apple and of course, I almost said Microsoft. That's the next story. Apple and Tesla. Microsoft's not splitting as far as I know. That would be interesting, though. Apple and Tesla, will they be higher or lower on Monday's close after the split? Weigh in over there at Options. Make your voices heard. A bunch you already have. We'll get to some of your results in a little bit. But now let's look at what the results are for the market. Spoiler alert, this little downturn in the market driving some paper out here. VIX on the rampage right now. 427,000 contracts. They may not sound like a lot. And on a regular day in VIX, you'd be right. That isn't a lot. But right now, the ADV is 307,000 contracts. So that is a heck of a lot. We're already well past the ADV out there in VIX land. SPY, similar story, not quite north of its ADV, but getting close. Remember, these are seasonally adjusted lower ADVs across the board right now. So the ADV in SPY is only about 3.5 million. Right now, 3.06 million on the tape. So SPY starting to light it up. The S, 720,000 contracts. The ADV, 921. That's pretty light out there. So it still has ticked up a little bit in the S as well. And obviously today, It's going to turn that around a little bit as well. The Q's already well past their ADV. Their ADV is about 1 million exactly out there. The Q's at about 1.2 million right now. And the Russell 2000, the only laggard of the bunch out there. Their ADV is right around a little bit shy of 500,000, about 450 or so. And they're at about 260 out there right now. So the Russell 2000 light. What's not light, though, are our single names. These things are lighting up the tape. Cost you 238,000 contracts to break into the top 10 most actives today. That's when you know something is afoot out there. AMD all the way down to number 10. That's another sign. Something crazy is afoot out there. Number 9, we already jump to 300K, and we're only at number 9, 304,000 contracts. That's an interesting, some might say a robust day out there. That gets us to Bank of America. Usually our symbol twin with our friend across the street. Not today. Bank of America at 304,000 contracts. Number 8, Facebook. Facebook interjecting itself between the symbol twins at number 8 there, 333,000. Then we get the other half of the symbol twins out there. Our friends across the street in Boeing at 335,000 contracts. I do miss going over to their delicious cafeteria these days. It's been quite some time. During the summertime, we used to have a great outdoor barbecue as well with music. Not so much these days in the COVID era. Boeing, number 7, 335,000 contracts. Number 6, American Airlines. Now we're already over 400K listeners, all the way at 400K, and we're only at number 6, 416 for American Airlines. Number 5, NEO. NEO doing over 500,000 contracts today, 516. Number 5, we're already jumping up to 500K. That's what kind of day we got on tap for us today, listeners. Number 4 is Apple. Apple's all the way down at number 4, and guess what? It's at 765,000 contracts. So 765 is not even good enough for number 1 today. It's only number 4. So this is an interesting day, listeners. Number 3, Tesla. Tesla's only number 3. And guess what? 808,000 contracts. So we're closing in on 1 million. And we got 2 newcomers here in the number 1 and number 2 spot. What could they be? Well, if you were paying attention to any of the news today, I think you may have a guess as to what it is. Outside of the Fed, the other big news out there is this crazy announcement that Walmart's going to join forces with Microsoft in this TikTok deal. So if you thought, what would make this already weird deal with Microsoft picking it up, you can maybe argue Microsoft has some use case for it, expand their presence in social media, get a more online presence going. That makes some sense. And now, you know what we're missing from that deal? Oh yeah, the world's largest brick and mortar retailer. Let's throw them into the equation as well. Well, that's exactly what they did today, and those things are lighting up the tape. Walmart, number 2, 813,000 contracts on the tape today, followed by number 1, good old Softy, over 1 million, 1.12 million contracts on the tape. If you're wondering where the biases are out there today, Walmart might be some of the most biased paper we've seen potentially ever, certainly in quite some time here in the top 10. 91% of the paper out there. So 91% of that 813,000 contracts, listeners, coming on the call side of the ledger. That's some seriously upside paper. Let's pull up Walmart really quick and see where they're hanging out right now, how much of that movement is continuing right now. 138 and a quarter. It's up 7.5 handles, or a little bit north of 5, almost 6%, but 5 3/4% right now. So that's a good run, and that's some seriously bullish paper. Where was this bad boy over the course of the past year ago? Was at 112, so a wee bit north of where it is right now. It's had some dalliances to the upside. It got up close to this again back in April, 132 and change again, as people realize, hey, people have to buy stuff in this pandemic. Maybe not in person, but definitely online. And they sold off again down to, it's like about 119 and change or so back in June. And now they're back up to the upside, 138. So Walmart, I haven't had a chance to read exactly what use case they foresee for TikTok, how that adds to their stable. That's just kind of the day we're having today, listeners. A lot of curveballs out of left field. Really quickly, we'll hit some earnings popping off. We got the earnings move results reports, hot off the presses, courtesy of our friends over there in Oratz Land. Dollar Tree, Uncle Mike's favorite. They were today before the bell. They closed at 104 and a quarter. They were pricing in 6.6%. They delivered about 5% to the downside. So again, underperforming from a vol perspective. We've got Box, which was at 19 and a quarter. They were pricing in 10.7%. They delivered 6.4% out there. And we got Abercrombie and Fitch, which was an interesting one. They surprised a lot of people, apparently, actually doing well. Apparently people are buying clothes right now. That surprised me as well. They were before the bell today as well. They were at 11.13 as of this report. They were pricing in, let's see, about 12%. They delivered 16.5%, actually. So they're outperforming from an overall vol perspective. So obviously a bit of an earnings surprise. One of the few names that's actually green on this report from a vol perspective, which means they outperformed their earnings straddle. If you've been listening to this show or the advisor's option, anything else where we've been talking about these ORAS reports for the last couple of cycles, you know that the narrative has pretty much been red. It's been underperforming from a vol perspective. So a lot to pop off. By the way, Zoom is after the bell today, or after the bell next week as well. Really quickly, Zoom at $2.9525. They're pricing in about $31. In the past, they moved $30.01. So they're very much in line with their previous straddles. Let's see. You got a bunch of other names, too. You can check us out for yourselves. TheOptionsInsider.com. We got to keep rolling into our next segment. It is time to get weird. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we break down some of the weird, the wild, the wondrous, the whimsical paper that is lighting up our tape, courtesy of our Eye of Sauron. Let's see what our Eye of Sauron has fixed its gaze upon first. We're going out to SIRI, a.k.a. Sirius XM Holdings, ticker symbol SIRI, S-I-R-I. Out there, so don't say it near your Apple device. You may trigger it unnecessarily. Trading right now $5.91, up 0.1%. And up, or I should say 1/10 of a point, up about 1.5% or so out there. A year ago, this name was trading, about a little north of where it is right now, about $6 and change, 606 to be precise. And it had a nice run going into the madness earlier this year. It topped out at about 740 right in mid-February. Then we all know what happened. The madness took root, got down to $4.11 on March 20th. So interesting, because you'd think people would be consuming a lot more content when they're all stuck at home, locked in at home, but maybe people thought they didn't have the money for the subscription. Either way, this one took a beating along with everything else. I'm not sure there was a lot of rationality to that sell-off back in March. People were selling everything. Then it kind of rallied a big again back up to about 520 or so by less than a week later, March 26th. Then it kind of gave all that back again a week later, down to 448 again by April 3rd, and kind of did that a few times before it rallied back up to about 591 April 30th, gave it back again, down to 520 May 21st, and then back up to its near-term high. I'm not even going to look at this chart, listeners. I bet you can guess the date. I'm going to guess the date. Let's all say it together. Yeah, was it June 8th? Yes, it was June 8th. That was the near-term high for Sirius as well, $6.52, and then kind of little Mount Vesuvius there. It popped right there, and it never really has looked back. It's been trending to the dark side ever since. Right now, $5.92. So well shy of that June 8th high. Another name that peaked at June 8th. I need to devote a little bit more research into exactly what's going on with the rest of the market outside the FANGs when it comes to June 8th, because clearly there's a sizable correlation there. All right, so let's see what's going on today. What did our Eye of Sauron find? Looked like, at first blush, it seemed like a call palooza, but then we dug a little bit deeper and it seemed like it might be a bit of a ratio call roll. I'd be curious to get your thoughts on this, Mr. Rock Lobster. The first print, one of the more sizable prints we saw going up today, was the D7 calls. So substantially out of the money, more than $1 out of the money calls, listeners, going up 10,663 times for 14 cents. And you say, oh, okay, well, that's interesting. They are opening, so this is new paper. Then we also saw a little bit later, it wasn't a spread, but it was about 20-odd minutes later, the Jan 7 calls going up on the bid 2,500 times for 50 cents. So interesting times, maybe a bit of, a first thought was that maybe it's a roll, but the paper is opening here in December. Also, the sizes are different, so it'd be a weird ratio roll. So it could just be unrelated paper, Mr. Rock Lobster as well. Someone really liking the D's and then wants to sell. Someone else wants to sell the 7s for size 20 minutes later. It's possible. I should note that second one went up as a tied trade, so there was another leg to it. It was tied to stock. Let's see, $5.92, so exactly where it is right now. That's where those Jan 7s went up as well. So it is possible, Mr. Rock Lobster. They are unrelated. Both of these are within and beyond, I should say, the earnings window here. The next earnings are on October 29th. So an interesting one. Mr. Rock Lobster, what are your thoughts here? Unrelated call love here in SIRI? You think these trades are conjoined at the hip? What says your spidey sense, sir?
Well, I actually, as much as you poo-poo me sometimes on the show, I actually try to do a little research on this for you. I actually try to add some value. Would you like to hear what I uncovered?
Yes, please do so.
Are you shaking with trepidation right now?
I am a Twitter, sir. I'm waiting. I'm willing.
So I looked at the trade tags. Remember, on the Option Pit website, or not Option Pit, but on the Option Insider website, I believe we do have a trade tag goodie there, although there's more to add now. But
yeah, we need to update that bad boy.
Yep. It appears that the Jans were crossed with stock, so it smells very buy-righty on the Jan trade. And the Dees was just flat-out single-leg spec buying. So it overall, I would say, pretty bullish flavor on that. So it's going up single leg on the Dees, and Jan. The Jan trade is tagged Jan 2022. Is it Jan 20? No, Jan 21s. They were tagged. They were tagged with stock. So it feels buy right on the Jan, long the Dees. Somebody's trying to get some long happiness going.
You got some long happiness indeed. We'll put this in our to be watched column, see if there is happiness to be found in this trade in the after hours, or I should say as the time rolls on here, pun intended. But yeah, it doesn't seem like, at first blush, seemed like it might be a roll, but once you start digging at the paper a little bit, it doesn't seem rolly. It seems like independent, sizable, and happen to be on similar strikes, but not exactly the same. Certainly not the same size, and not exactly the same tenure or style. But we're going to put this one in the to be watched. Let's come back to it as well. As we move on to another name, we're just talking about the TikTok dance with Walmart and with Microsoft. Another name that's kind of been caught up in this TikTok brouhaha has been Oracle. Another kind of unlikely name when you think about it as well. But I guess they got money to burn and they want to get in on this whole TikTok craze, videos for the kiddos out there. Oracle right now, ticker symbol, you know it, ORCL, 57 and a quarter, off about 18 cents or so. It's not a big day for Oracle underlying wise. A year ago, they were trading pretty close to where they are right now, 52.39. So this has kind of been a very steady, stalwart name of late. Maybe that's why they want to goose things a little bit. They want to get TikTok going and maybe have a new business line for them. Going into the big sell-off in February, they were at 55.5. They didn't really move much this year. Then this madness came in, and they dropped a bit. They dropped down to about 39 3/4 or so. So I guess Enterprise is cutting back on their CRM expenditure. I'm not sure. Either way, everything, like I said, I don't think there was a lot of rationality to this sell-off. If you had it, you needed to liquidate. You had to liquidate quick. That's why we say, when it all hits the fan, listeners, correlation moves to one. Go back and check the charts for gold and everything else that's supposedly all these inflation and sell-off hedges when all that madness hit back in March. Guess what? They sold off as well. Even Bitcoin, off 30%. So it was just a sell-all time out there, and Oracle got caught up in that as well. But they remedied that pretty quick. But then looks like, let's see, that big sell-off for them actually came early in March on the 12th. By the 18th, when most of the other names were kind of still spiraling around the bottom, they had already recovered up to 47 and a quarter. By March 25th, they were trading 46, and by April 17th, they were back up 54.5 or so. So kind of a quick blip out there, and that was about it. And they've kind of been at these levels ever since. So interesting stuff to be found out here in Oracle. Kind of a steady name with the exception of this interesting foray into TikTok. Someone out here may be thinking this is an interesting name, still coming up and picking up 2,854 of the SEP 57 half. So these are pretty much slightly out of the money. These are expiring on the 4th as well. So these are the weeklies. These are not straight up SEPs. These are expiring pretty soon. About a quarter of a point out of the money calls for $1.19. These are pretty juicy. There are earnings, but these are not. Earnings are the 10th, so this is not even an earnings play. You don't even get earnings, Mr. Rock Lobster, for that amount of juice. So clearly they're pricing in some TikTok juice into this bad boy. That's about a 37% IV. I have to go look and see how that compares to historical. But I'm going to go out on a limb and guess that's pretty high for Oracle. These calls were 111 at 122 out here. So Mr. Rock Lobster, seems like someone taking a juicy swing at a near-term fence here in Oracle. Are you on board with that one as well, or do you have a differing opinion, sir?
I don't have a different opinion. I have a same opinion And I mean, what has every big tech company done going into earnings this last cycle?
Well, forget earnings. What has every tech company done, period? Just go up, right?
I know, just they rallied. So I just, so it expired before earnings, but it's a cheap vol. And it just looks like a straight old, just a straight up go out and buy them. And I think, I'm guilty of the same thing when the calls get cheap enough going into earnings, they get it wakes me up. So I think it looks like a good old fashioned just get long before the earnings and then close them prior to. And that's it.
Yeah, I'm trying to parse and see how this stands here. The vol here. We're in the 86th percentile, according to Mr. Schwartz and his Schwartzatron over there at Trade Alert for this vol. 30-day vol right now is 38.3. That's pretty high, 86th percentile. So that is pretty rich. Obviously, they're pricing in not just earnings juice, but some TikTok juice as well. So this guy needs a pretty hefty move in the next week for this bad boy to pay off. So we're coming back to this one. I'm curious to see how this one fares out here. This guy reaching a little bit here in Oracle. Again, usually kind of sleepy, steady name compared to some of the high-flying, more consumer-oriented tech names like your Apples and everything else. Oracle's never really been in that conversation, so interesting to see them pricing in a little bit of juice right now. Let's move on to our final name. Let's get a little bit weirder. Let's get a little bit outside some of the big names for our final one. This is Sempra Energy, ticker symbol SRE. This is an energy company out of San Diego. So utilities, not usually the sexiest of names. Let's see. 123.5 is where this bad boy is right now, up $1.10 or nearly 1%, so a good little lift for them today. And this chart looks kind of like utilities until the pandemic hit. This thing was pretty steady. It was at 142 even, so well north of where it is right now a year ago. And it kind of slowly drifted up to a high of about 161, almost 162. So that's a pretty good run for a utility. That's not that sleepy actually at all, from 140 up to 162 or so in the span of just about 6 months. That's not bad. And then, of course, the great nadir came, and they sold off to $88, so pretty much got cut in half in the middle of March. And they have had a lot of fits and starts ever since, up to 123 again pretty quickly in March 26th, then sold off again to 106. Did that a few times. And then they topped out recently. Take a guess when, listeners. Just go out on a limb and guess. Yep, it was June 8th. And they topped out at, let's see, how high did they get? 134.79. And they couldn't really reach that level again. They sold off again down to 112 and change later in June. Just it wasn't until recently they got pretty much close to that June 8th level again at 134.66 on August 13th, and they sold off again. So a couple of near-term peaks here for Sempra Energy. That's where we find ourselves today. What did our Eye of Sauron find for us? Looks like more calls. This time the SEP 130 call, standard SEP, so not playing in the weeklies. I'm guessing there isn't a weekly probably in Sempra Energy out here. 2,313 of the SEP 130 is going up for 70 cents. These things were 70 cents at $1. This guy hit that 70-cent bid 2,300 times. Over there on the SIBO, the earnings are on October 30th, so no earnings juice for this guy in this one. Mr. Rocklop says, this seems like it's a fairly standard overwrite over here, hitting the bid that you probably have to do in a name like Sempra to get over 2,000 done. What are your thoughts here as well on our final odd block name, sir?
I guess as long as your energy company is not in California, you're okay. So, yeah, you think about it, you look at it looks like, your standard, okay, they're going to get 0.5% out of this and kind of move on. And with the way this market feels lately, it probably is not a terrible idea. So that's how that appears to me. Just, good old fashioned, what people used to do before we were in the pre-COVID days. Anyway, that's what it looks like to me. Just simple old buy right, trying to make a couple of bucks and move along. Nothing to see here.
Nothing to see here as well. So we won't be coming back to this one, but pre-COVID days, what the heck were those like? I've forgotten. Those are lost to the sands of time, sir. As we move on into your segment, it is time for the Thursday Mail Block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. It's mail block time. You know what that means. Time for you guys to take the reins and dictate where we go. I mentioned at the top of the show that we did have another audience poll up right now, courtesy of Mr. Overby and Options Playbook Radio. If you're not listening to that one, I know a lot of you are. Check it out. It's a good one. Talking about collaring the big split names, Apple and Tesla, right now. And he raised an interesting question. He wanted to know what people thought post-split would look like for both of these names next week, Apple and Tesla. So we asked you exactly that. Yesterday, Apple closed at 506, Tesla at 2153. Quite simply, were they going to be split adjusted, of course? They obviously will be nominally lower on Monday. Split adjusted, where will they be on Monday? Higher, lower, or some mix. So we gave you those choices. Both of them higher, both of them lower, or Tesla higher and Apple lower, or Tesla lower and Apple higher. Very simple. Mr. Uncle Mike, I know you love both of these names dearly, especially Tesla. It's a key component of the strategic night. What are your thoughts here on post-split blush, sir? Will they be higher or lower?
I would say that initially I'm saying they're going to be lower. I do think that those stocks are going to rally, but not because of the split, just because they're good stocks. But I think that they're going to, initially it's going to be a pullback in both of them after the splits.
You heard it here first. Uncle Mike says Tesla is, quote, a good stock. So put that in your core holdings, listeners, especially if you're close to retirement age. That's a really important, crucial consideration. So one vote for lower. Mr. Rock Lobster, what are your thoughts here for our poll?
I will go with TOSAW on this one. We'll go lower.
Oh, 2 votes for lower. Where our audience, usually a cynical bunch, not so much right now in the early blush here on this poll. They're saying higher, about 54%, followed with about 25% for lower, and then a tie for Tesla higher, Apple lower, and Tesla lower, Apple higher. So mixed, both at 10.3%. Again, that's kind of just kicking off. Get over there, add options, make your voices heard. Brian and I will parse all that in a special huddle episode of OPR next week on Thursday here. Next up, Uncle Mike, sir. More love for you here. Gonna give Uncle Mike a big head, all you Uncle Mike lovers out there. This one comes from Tony P. We discussed this on boot camp yesterday because he mentioned this, but I want to make sure I read it here as well because he mentioned you, Uncle Mike. Tony P. wrote in to say, a short note to thank you for an amazing network with excellent educational content. Well, you're welcome there, Tony P. He goes on to write, I have been listening to your programs and parsing the knowledge for several months and love to listen on my way to work and back. Thank you to your guests for their time and knowledge. Well, considerate fellow. He says, Dan and Uncle Mike are standouts. Wishing you the best, and I'm sure I'll be writing with myriad options questions in the future. But there you go, Uncle Mike. Look at you getting a little specific individual love. We had to say here for Tony P., who's clearly an Uncle Mike fan, sir.
Tony P., I love you. Thanks for the kind words. I'm very humbled. We have... I think it's roughly 10,000 listeners to this show or some high number like that. And just very honored to hear back from them. And this show means a lot to me. I think it means a lot to all of us. And that it's a lot of fun. And it's always good to hear from our listeners.
I have to throw cold water on this. Tony P. is dead to me. Dead to me.
I was just going to say.
I'm not answering any of his questions. I'm gonna scribble all over his thing. I got nothing to say on that.
I was just going to say.
TOSAW does do a good job. So I will say at least that he did give props to a knowledgeable person in the space. But he's still dead to me.
Before the Rock Lobster takes too much umbrage, he got some love as well. This comes from frequent listener and commenter Scott Somer, who had to share with us this tweet from Donald Trump saying, beautiful Maine lobsters will now move tariff-free to Europe for the first time in many years. Great, in all caps, new deal by the USTR, levels playing field with Canada, millions of dollars more in exports. And he had to include the hashtag with that of Rock Lobster. So there you go, Mr. Rock Lobster. You are not forgotten. You are remembered in all great trade agreement tweets. Does that make you feel better, sir?
It does make me feel a little better. I probably had a pang of jealousy there with TOSAW, but I'm sure I'll get over it. I'm sure I'll get over it sometime.
Our listeners are egalitarian and nothing else. They spread the love around, except for the meatball. He gets no love. All right. Like, actually, Scott loves him too. He's very worried about the hurricanes and him moving to Austin, but I digress. Let's move on here. Our last show, remember we kicked off our broadcast week, listeners, with a little bit of Masters of the Universe love. That was kind of fun. Well, clearly our audience liked that, including this listener, non-GAAP bag holder. I might get our Twitter handle of the week award. He chimed in, he listened to our show, and he got so excited he tweeted about it to Kevin Smith. And he says, Kevin Smith and hashtag Masters of the Universe gets a mention on the option block. Hashtag unlikely pairing. And yes, Kevin Smith, I do believe, is doing a new Masters of the Universe show on Netflix, I believe, which is why he included that. So Kevin Smith getting a little bit of a shout out here on the old option block. Thank you for that, non-GAAP bag holder. I told him that we are fans from the way back, so it's not that unlikely, and he said he is too. So good to see we have some closeted or perhaps not so closeted Motu fans lurking out there in the audience. Who knows? Maybe we'll have Kevin Smith on the show one of these days to discuss all things Motu. Standing invitation, Kevin. You want to come on and talk Motu? I'm here for you. We can just forget about this option stuff. Talk about the important stuff. He-Man and the Masters of the Universe. All right. Next up. What do we got here? Joseph Chividian. We got some good names this week. Joseph says, this was coming, I think one of our last shows talking about Apple. He says, I sold my Apple options yesterday. I bought 5 470 strike, I'm assuming he means calls, for 76 cents each. I sold all 5 for $190. Almost tripled my money. If I held on, Apple is trading at $190. Those options would be worth about $2,200 each. I sold all 5 of mine for $1,200. Just one is worth $2,200 now. So sad. And a sad kind of crying face. Now, this comes up a lot. You know, and I pointed this out to Joseph as well in between our shows. And this is, I kind of wonder sometimes what is more painful for people, losing money or missing out on potentially large profits. I think sometimes people psychologically view the latter even worse. They would almost rather lose a little bit than make some money and miss out on a really big windfall. That seems to be almost psychologically more damaging to a lot of people. I wouldn't mind talking about to some psychologists, see if there's any actual hard data on this. But Joseph certainly is in that camp. When I pointed that out to him on Twitter, that, you know, it's better to leave some money on the table than to actually lose money, he wrote, yes, it is. Those 470 strikes expiring today. I made about 2.5x on for my initial investment. So I still have a few 470. I guess he put some more on. So he's holding on to his upside. So he still has some more upside. So he was kind of more just venting. I get it out there. But still, you made some money. Take that. Let that be your consolation. You'd much rather win and make $2,200 than lose $2,200. That's a much, much better deal. So I do feel your pain out there, but you live to fight another day, and you got more money in your pocket to do it. That's a good thing in this market out here right now. Speaking of Apple, we had another person chiming in, Miker chiming in. We were talking about, this is actually Meatball on Monday's show. He said the Apple move was kind of nuts. When the stock is up $10 and the vol is up 7 points, that should tell you something. And Miker chimed in to say this move is just way out of line. I'll let the others buy here in the Moranosphere. He's quoted a new technical term here, Moranosphere. Yeah, I think a lot of people are with you. That's what our poll's all about. Go vote in our poll, Miker, if you think that's the case. All right, let's just see. Got to be a quick one. We're kind of running up against it. Let's close on some love here from Commercial Truck and Crane Financing. Not you'd expect our target audience, but c'est la vie, chiming in nonetheless. They just chimed in to say, great job on all your hard work. Well, thank you for that, Commercial Truck and Crane Financing. We appreciate that. Right back at you and all your hard work doing your truck and crane financing. Probably an interesting area right now. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we do just that. We go around the horn and tell you what we're watching for the rest of this week into the weekend. Let's start with the Rock Lobster, because he had to take so much umbrage there at the top of the segment from our friend there, Tony P. Mr. Rock Lobster, what are you watching for the rest of this week into the weekend, or at least until Vol Views tomorrow, sir?
Well, you know, this crazy VIX move we had, I thought the vol move, it was really sharp this morning, or I guess at 12 o'clock. It felt like the vol had been bidding all week, although we were kind of stuck at like the 22-ish. And then like this big punch for the futures. And VXX is about, $1 away from being unchanged on the day. I think that would be pretty, I think that'd be pretty bearish for vol and pretty good for all the other stocks. My biggest thing I'm watching actually is I started accumulating a little bit more of these stocks that are a little bit more sensitive. Abbott with this 15-minute $5 COVID test. I think this could be kind of a game changer. Like Vegas, restaurants, all kinds of stuff. Like if, it feels like this is something that's super positive, giving people a little bit more confidence, making things easier, going back to see a baseball game. They just freaking give people the COVID. I don't know, if you have a temperature, give them the test. So I feel like this is opening some things up in a lot of stocks that have been kind of smashed because of people kind of getting back to normal. I think, it's not going to happen tomorrow, but this is definitely getting us a little bit over the hump and a little more positive. I think it might take a little bit of the way from big tech and start moving into some of these other places that are that the market has kind of not looked at for quite a while. So I'm talking my book a little bit, but anyway, that's what I was adding today, and I'm curious to see how. I think they're underpricing this a little bit, in my opinion, but my opinion's worth. It's just the opinion of one rock lobster.
Now, the opinion I'm really interested in are those crickets. They are very vocal out there these days. So let's see what they have to say about the current level of vol in the VIX term structure. We turn our attention now to the uncle list of Mike's. Mr. Uncle Mike, I think you've recovered from all your love from our listeners. What are you watching for the rest of the week into the weekend, sir?
Well, I think what we really need to keep an eye on is just with the weekend comes weekend risk. So it might not be a bad idea to trim a few positions on Friday just to be prepared for something happening over the weekend. And in these kinds of markets, bad news typically tends to happen when you can't trade them. And so it's like if you work in corporate America, if they're going to put bad news out, they like to do it on Friday. So that way you have the weekend to digest it before you come back and yell at the bosses again or whatever the case may be. So with that does seem to be kind of a theme. So I would definitely be prepared for that in one way, shape, or form tomorrow when you go into your trades. And then what I'm watching is just seeing if we can continue to get new all-time highs. It feels like you're in a bull market when an up day like today kind of feels like a down day. That's what I'm watching.
Yeah, if you haven't gotten the message by now throughout the COVID era that there is literal weekend risk every single weekend, then I don't know, maybe you're not paying attention. You're certainly not listening to this show. So if you're carrying large, sizable, and potentially risky, let's say aggressive short premium puts near the money going into the weekend, maybe you want to dial that back. That's a recipe for a disaster in these markets out here. I know. Wise words, Mr. Uncle Mike. Unfortunately, that music means we come to the end of the wise words, at least for this program. If you need a little more in your ear holes, we got you covered. It's Thursday after all, so we're going to take a little break. We're going to reconfigure. Going to pump in some fun stuff into the live chat, and we'll be back in exactly half an hour to break down all the fun happenings over there on the futures options side of the fence on TWIFO. But before we do that, let's go back around the horn. Let's start with the Uncle List of Mikes. Mr. Uncle Mike, sir, if folks are intrigued, they want to pick your brains about weekend risk or anything else going on. Maybe they want to call you up like Tony P and just say you're the best. Where should they go? What should they do?
Feel free to go to my website at stcharleswealth.com to learn more information and reach out to me. I'd be more than happy to talk with anyone. Not afraid to use options in long-term portfolios. That's kind of what we do here.
That is what they do. So if you're sitting on a boatload of Tesla, you want to say, how do I hedge this? Maybe you call up Uncle Mike. He can walk you through it. Mr. Rock Lobster, if I'm intrigued about all this madness going on and the volatility surface, where should I go? What should I do, sir?
Come on over to optionbit.com, go to memberships, and look me up, Vol Trade Club, Trading Legion. If you want some of that meatball, you get some sharp bets and some Vol Edge. We just run the different product books. And come on by. We're here. Hey, we're doing it every day for you.
Doing it every day for you, just like our network. Sometimes multiple times a day here on the network, but you can begin your journey over there. Optionpit.com is the place to go. On behalf of the greasiest of meatball, I should say, and the rockingest of lobsters, and the uncle-list of Mikes, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Keep them coming, for voting in our polls, for listening live. If you're listening live, stay tuned. We'll be back in exactly half an hour for some fun TWIFO fun. Otherwise, we'll be back tomorrow, back to noon Central for Vol Views. New time, kind of the old time back again. So mark that in your calendars. Noon Central, 1 p.m. Eastern again for Vol Views tomorrow. Then we're back again on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.